how about we walk us through a typical client journey from like initial contact to managing a fully functional investment portfolio, just for our listeners here who are maybe interested in investing in Jacksonville through JWP. What does that look like for them?
Yeah, well, it's built to be very easy and enjoyable, and it's built to be very different than what most people think about when they buy a rental property. So let's just say somebody here is listening to this call and they want to inquire about investing with JWB. You just go to our website or give our office a call, and you jump on the phone with our sales team. And rather than just talking about properties right off the bat and throwing you pro formas, we really want to get to know you as an individual and understand what your ultimate financial goals are and the resources that you have to put towards it. So we'll have generally maybe 3-4 phone conversations. And over that time, we really get to know you and we build a real estate investment plan with you. And when we do that, then it's really simple. We just build the model, we build the plan, and then we simply just go to the assets that JWB already owns, and we recommend those for you to purchase. You never have to come down here. You never have to go on an open house tour or whatnot. We get to have that relationship with you, no matter which state you're in, which part of the world you're in. You can build that portfolio with JWB, and we recommend that portfolio, and you select that. Now, after that, we help you all the way through the closing process. So generally, depending on how you're buying, it might take 30 to 45 days to actually close on the portfolio. Well, guess what? That's why you have a team of 130 individuals here, because we're guiding you every step along the way, making sure that it's easy and enjoyable. And when you close on the homes, that's where the real fun starts, because that's where our client service kicks in. And you have a dedicated client service team. You'll have phone calls at your discretion. Could be once a month, could be once a quarter, whatever you would like, as far as sitting down with the teammate to understand how your portfolio is performing. And we have annual performance reviews as well. So we can say, okay, well, this was the original plan. How are we doing? Are we hitting our return on investment goals? What should we be thinking about in the next year as well, whether that's new purchases, or do we have certain assets where leases might be coming due? We need to make sure we plan for those cash flow ups and downs. So just a complete comprehensive process from the planning in the very beginning to the execution and then the service all the way throughout.
I like that a lot. There's a lot of times where people go out there and they get, really excited about real estate. Maybe they read Rich Dad Poor Dad, or they went to some real estate conference. And they go out and they buy a property or two, and then that's it. And that's it. Nothing happens after that. They have one or two properties. They sell it eventually. And then that's kind of all their real estate investing is. I like that JWB stays in contact with you, helps you fulfill. Like, buying one or two rental properties is great. Maybe that's all you want out of your strategy. But I think most people really want to get into real estate is like what we talk about. They want to create generational wealth. And that means consistently thinking of the next one. Maybe you're not I buy a property every year type of person. Maybe it's every other or every 3 years, or maybe you want to, but you just can't get there yet. So how do we work with those people to get to their goals? Because if you ever met somebody who has 50 properties, well, they started off with one property.
Mm-hmm.
They didn't get 50 properties off the bat, unless there's some billionaire's, child that was just gifted it. Most people did not. They started off with 1 or 2 properties, and it grew there over time. And so I like that JWB is working with people, just staying in contact, keeping them motivated, and you'll just be surprised in a few short years where that portfolio could really be.
100%. I feel this need to be able to share this message with more folks out there, because as a country, we are really underprepared for getting older and supporting ourselves financially. And that problem is only growing worse. The median amount of retirement savings that our country has when it's time for retirement is under $200,000. And if that is age 62, that you have under $200,000 and you retire, that means there's no more active income coming in. How many years can you live if you only have $200,000? And that's the median. right? That is like the middle of our country. There's a lot of folks out there who don't have anything. And real estate is something that is consistent and it gets better over time. It grows, the cash flows grow over time, the appreciation, the tax savings, the principal pay down, the inflation hedging. Those are the 5 profit centers there. They all grow more and more over time. And it's just about creating access for individuals. And the earlier you start, the better it is for your financial future. So I look at opportunities like this to share the message with you, Daniel, with on this platform. I super appreciate it, but it's a real need in our country, and many people don't know how to solve it, and many people are just putting their heads in the sand. But it's unavoidable. Social Security may or may not be there in the future, and even if it is, it's not enough. So I look at rental properties, and the access that we can provide to this asset class is something that is sorely needed in this country.
Yeah, I agree with you there. It's interesting that you meant retirement because I feel like that is under talked so much. I mean, most people unfortunately are not ready for retirement when they get there. They're underfunded. They think Social Security will, it's nice, but it's not nearly enough. And most of the time when you get to retirement, it's like, let's be honest, you worked your whole life, you like to enjoy your retirement. They call your golden years for a reason, right? You want to travel the world, you want to play with your grandkids, and the last thing you want to worry about is, can I pay my mortgage and my rent and my health care? Because as you know, the older you get, unfortunately, more health expenses, things like that. You want to enjoy your life, and if you're just worried about money, you're not going to get that chance. And so, thinking the earlier you can, through real estate, now you have an immense amount of wealth in your retirement, and you're easily covering your own expenses. And now you're turning to your family. You're like, oh, I got me. I don't have to worry about it. And then this is where real estate really takes the next step up. Is people don't understand for estate planning how great real estate can be. Because there's basically a thing called step up basis when you pass away, and you can give your real estate to your beneficiaries, such as your kids and your grandkids, and they get 100% step up, which basically means you're wiping away all the taxes.
Which is surprising because if you talk to folks, and I get to talk to thousands of investors every single year, and I'm always curious the reasons to not invest in real estate. And especially for older folks, many will say, oh, you know what? I don't want to do that because I don't want to pass that along to my kids if and when I die. And I'm like, oh my gosh, right? What you can do is actually you can start their army of income producing assets for them. And from a tax perspective, start with a huge advantage due to the step up in basis that you're talking about there. And so I just encourage folks to think of it from a different perspective and break down some of those things that you may have thought about investing in rental properties, because if you look at how this asset class has performed in good times and in bad times, it's not a better asset class. And that's why, even for the first time now, Wall Street is investing hundreds of billions of dollars in single family rental properties now. It wasn't possible for them to do that back in the day because the technology wasn't good enough. But now they have access to the single family rental property asset class, and mom and pop investors can too. It's right there for you. You just have to change your perspective, I guess, a little bit about some of the things that might have been holding folks back. And then, of course, find the right team, right? Find the right vertically integrated team, find the right accountants to help you. That is a super important part of your team. And then, you can prepare yourself for a better financial outcome.
Yeah, real estate's not just for the high net worth rich people out there. It's for everyone. All right. And if you might not be able to do as much as some other people, but just getting into it, and you'll be surprised how it is. Like I said, fully take care of your retirement to the point where not only are you completely okay, but now your kids and your grandkids. I mean, how wonderful, like you were saying, neither one of us, we didn't really have much, we had to make it on our own. But I mean, how much of a leg up would it have been if, someone above us and our parents were just able to give us that, where we don't have to climb this mountain from the base, like we're already halfway up or something. It's just such a leg up. I think most people want their kids and they want their grandkids. They want their family to just basically have that step up where it's like, here we are, like your future is already paid for you Now you can go out and be creative and do what you want to do and do what you love, but you don't really have to worry that about money.
I love it. I love that ability to do that. And I have 2 kids, and I'm very big on helping them understand how to openly talk about finances, because that's kind of a taboo subject in most households. But not in my household. We talk about it. We talk about investing. We talk about those things. And when I think about what a great gift it will be to pass along my real estate to my kids, I think of it not only as far as the financial part, but I think about what better way to teach people what a business runs like than a single family rental property. It's like a teaching tool for me. There's income, right? There's expenses that are going out. You have to make decisions on how to do additional investments and when's the right time to fix this thing. What is not something that you want to fix because it doesn't drive a return on investment? All of those questions we get to ask with my kids, and you can do it through the format of a rental property investment. So that's just a little bit of the icing on the cake for me, and is why I love building this, for my future generations too.
Yeah, it's great that you can take care of your family through real estate. So the current market in real estate, it's a little weird right now. A lot of people have a lot of feelings about it. You started the business back in mid 2000s in '06. You had the huge Great Recession and everything. And then real estate boomed for a long time. Then the pandemic happened, and it's just been kind of up and down and everything right now. So can you give us a little update on like what's the current market in real estate, especially here in Jacksonville?
Yeah, it's for years and years and years now. People have been calling for the real estate crash that never happened, and I think most people are sitting here and they're saying, well, it never happened. I don't understand how that didn't happen. And now it feels like people have understood that the real estate crash was never going to happen. It's not going to happen now. Um, but they lack the understanding of why. And I started to talk about it in 2020 that I didn't see prices going down. I shared that with all of our clients, and we do a show, every week. And I have those recordings where I was like, I don't see home prices going down in 2020, and I've said that every year since then. And the reason is because we have to understand that real estate is driven like any other marketplace. It's driven by supply and demand. And even as interest rates now are higher than we all want, right? They're over 7% right now. They were close to 8% in 2023. We still saw home prices go up in the Jacksonville market and across the US overall. Well, why did that happen? It's because there is such low supply in Jacksonville and across the country. And when you have low supply, even though interest rates are high, that tamps down demand a little bit. But when supply is so low, that creates a high floor for pricing. And that is what has led to continued home price growth, even as interest rates have been so high. So where do we go from here? Well, most people don't see interest rates going up from here. They see interest rates coming down. And so what I'm sharing with all of our clients is this supply problem takes a long time to fix. It's because it takes a long time to build a lot of single family houses. And so it's going to be a problem. This low supply is going to be here for the foreseeable future. But start to ask yourself what happens when interest rates go down. If you look over the course of history, and there's data to support this, if you look back and see times where interest rates fell at least 1%, home prices went up higher in appreciation than the historical average. And they don't even have to drop 1%. You probably know this, as for anybody who's listening here, right? When mortgage rates go down, you start seeing reports about mortgage applications go up. More buyer demand comes into the system, and it creates more demand overall. So what I'm sharing with folks is in a not your average take on this is right now we have a high floor of pricing because of low supply. But the best time really to invest is while interest rates are high before they come down, because we expect to see continued home price growth, not just because of the low supply, but as interest rates come down over the next 6 months, 1 year, 2 years, who knows how long it's going to take, you're going to see continued home price appreciation, especially in markets like Jacksonville, where you have low supply and high demand and high population growth.
I'm really glad you mentioned this, Craig, because I actually had recent conversations with people about this because people are just, they're pretty down on real estate right now. Like, oh, I don't want to buy. Just I feel like I'm gonna lose money. And I'm like the opposite. I was like, I feel like now it is the best buying opportunity you're gonna have in a while. It's the problem is with real estate is it lags behind. So you don't know if it was a great opportunity until 2 years after it was, right? Like no one realized that 2012 was the best year to buy real estate. But everyone knows now when you go look back. But in 2012, if you were buying real estate, it was probably really hard. But everyone who bought real estate in 2012 is very wealthy now. I feel like now, maybe not to the extent of 2012, but now is our chance because of the interest rates. It's like you were saying, the interest rates has kind of stagnant growth, okay? But supply's still low. There's just so many other things going on. That's why you haven't seen housing drop so much. It's more like plateaued or more reasonable growth. But like you said, what's going to happen once these interest rates go? Oh, demand's going to skyrocket. Demand's going to skyrocket and prices are going to skyrocket. So reality is what you're doing is you're buying significant future appreciation right now. Okay. I mean, no one knew about the pandemic, but if we could all go back in time, we'd all buy real estate right before the pandemic or right at the beginning of the pandemic, while interest rates were super low, appreciation hadn't skyrocketed yet. Everyone would, but we can't. Okay. So what's the next best time? It's now. It's look at the trends. No one fully knows what 2 years is going to be like, what the interest rates. We're all taking a guess. But I think we could probably say this, they're probably going to be lower than they are today. And if they are lower today, demand will go up, which means prices will go up, which means you are buying a high return on investment by looking into buying today. So don't be afraid when people, the more or less likely people who are wanting to buy is usually the best buying opportunities.
100%. You nailed it right there. And what I also want to share with folks is, listen, I know what it's like to buy in the exact wrong time, right? I bought 40 rental properties. I leveraged them. I was a 23-year-old kid. And, those rental properties then in the subsequent 4 years fell 35% in home value. But what I share with folks is I wasn't sweating that because I had a buy and hold outlook. This was my retirement account. I wasn't going to sell. And my rents continued to stay constant or go up. During the Great Recession, rents went up in Jacksonville. And so maybe you're looking at this like we are, where buying right now is a great opportunity because of the effect of interest rates going down in the future and what that will do to home prices. But maybe you're looking at this and saying, you know what, maybe you don't buy into that. Well, let me share with you that those 40 rental properties that I bought in 2006, I still own them today. And the beautiful thing about real estate is over a real estate cycle, what you start to see is that same appreciation rate performs over and over and over again. You just have to give it enough time. So those properties in 2006 till today, the average home price appreciation rate in Jacksonville each year is about 4.9%. I ran the appreciation rates for those properties that I bought in 2006 that went down in value, then have then gone up in value. And guess what? They're over 5% each year, annualized. So overall, even though I bought in 2006 because I held on for as long as I have, I've received better home price appreciation with those assets than the historical average for Jacksonville. And guess what? It'll be the same way for all of you who are investing as well. You'll hold on to this asset for 10 years, for 20 years. It's like you already know the answers to the test when the question is how much home price appreciation am I going to get? It's going to be right around what that historical average of home price appreciation is for the Jacksonville market or the market that you live in.
Yeah, I love that story because it's like, hey, I bought at the worst time. Right? Like you can't make a bigger mistake than I did, which is basically buy at the worst time. And here we are 20 years later, and you're just like, it was amazing investment. And that's what real estate is. You don't even have to be perfect. You can make a huge mistake that actually turns out to be significantly in your favor because you just stuck with it. Real estate over time, like I said, now the actual rate of return is higher than the average. And beyond that, you probably didn't even consider like cash flow. You know,
Exactly,
the
right. That was
potential
just the
tax,
peak business.
yeah, potential tax is just appreciation. So you obviously had cash flow that bought other rental properties. So now you just skyrocketing. So like actual rate of return is when you put all those things in the factor, it's probably even difficult to even calculate, but it's definitely double digits.
100%.
Okay. So
100%. And our clients on average have earned 22% returns on their money every single year for their real estate portfolio. So, and that's when they bought in 2007, 10, 11, 15, 20. It's like knowing the answers to the test. And that's why I love this asset class so much. I already
yeah.
know how we're going to be able to perform for those that we get to take care of their money. And it would be a bumpy ride if we were in some other assets, because sometimes it's like this and sometimes it's like that. So slow and steady and above average returns is what you can have in real estate.
I mean, if you can guarantee 22% rate, I mean, everyone's taking that. I mean, that's just an amazing. I mean, like the stock market when it makes 22% is like the best it's ever had in like decades, which is great. But then it goes back to historic norms, and even sometimes lose money. So it's like to have that kind of growth over time. It's such an amazing asset class. So I'm personally really high on Jacksonville. I think we kind of talked about high interest rates and like that's going to create a great buying opportunity now because of the appreciation when interest rates drop. I think Jacksonville is unique. I think Jacksonville in the next 5 to 10 years is going to be completely different than what we think it is. So now not only are you going to have interest rates coming down, but you're potentially going to have huge appreciation because what Jacksonville's got to be. If 10 years ago, everyone who wanted to buy would have bought in Nashville because what Nashville is today, right? So it's like, I feel like Jacksonville's on that same plan. So give me kind of an idea of what your thoughts on like, what's the landscape and like, how are you evolving? What is JWB saying? How stay ahead of it in the next 5, 10 years here in Jacksonville?
Daniel, I love where your head's at, brother. I love where your head's at. I'll just add some context and some figures to support your message there, which is my same message. People talk in real estate terms, they talk about investing in the path of progress. And they think, well, the best thing I can do is buy a piece of property next to Publix, is a big, grocery store here in the Southeast, right? Or the next big shopping center. I want to own a house right next to that. And they think of that as the path of progress. Let me tell you, the biggest path of progress is a revitalized downtown. When you can own single family rental properties around a downtown that is revitalizing, that is the biggest opportunity for you to increase your wealth, basically piggyback off of all of that median income growth, all of that rent growth, and all of that home price appreciation growth. And the stats don't lie. If you look over the last, from 2013 to 2022, you go back and you look at home price appreciation rates across the entire country, and then you compare that to just revitalized downtown cities like Denver, Austin, Nashville, Tampa. Those cities experienced 27% more home price appreciation than the national average. It's because revitalized downtowns drive median incomes up, they drive rents up, they drive home prices up, and everybody can win. Because when median incomes go up, your home prices can still go up and it's still affordable. That's how everybody can win. And so JWB has been investing in those neighborhoods since 2006, since we started. And we put all of our clients in those neighborhoods right surrounding downtown. And it's because of this effect. Because a lot of times, if you want to invest in a revitalized downtown, you got to have deep pockets, or you got to take a lot of risks. You got to buy a downtown building. But our message is do this in a risk mitigated way by boring old single family rental properties. Just do it strategically around a downtown that is revitalizing. And then you can get that outsized growth without taking on the outsized risk. And in Jacksonville, I'll just tell you what I mean by being revitalized. We have $4 billion of active construction going on in downtown Jacksonville right now. $4 billion with a B. We have an incredible number of projects that are happening all over the downtown landscape. There have been more city incentives that are available now for developers, so that's spurring growth. We have the owner of the Jacksonville Jaguars, Shad Khan, who's investing $300 million of his own money to bring a Four Seasons hotel to downtown right on the riverbank. And we're in discussions right now. There's been a framework for a $1.4 billion stadium of the future for the Jacksonville Jaguars to stay here in Jacksonville. So you have all of this momentum happening. And JWB was an early pioneer in this. In 2020, we saw this happening. We wanted to be a part of this. And so we invested $68 million of our own money in acquiring about 20 city blocks on the north bank of downtown Jacksonville. That's about 12% of all of the north bank of downtown Jacksonville. And what we have done is acquired all of that real estate, and we have set up a fund called Gateway Jacks. And Gateway Jacks is going to be breaking ground on the first phase of a $2 billion development in the heart of downtown Jacksonville. The first phase is the first phase is a $500 million groundbreaking that will be happening again later this year. So we are all in on this because it's great for our community. It's great for our clients because they're going to receive outsized benefit in terms of better returns on investment because of this. And then ultimately, many years down the road, JWB will win as well. And so we couldn't be more excited about it.
Right. I mean, that's what's big about Jacksonville. Like when the community wins, we all win. So like you were saying, reviving the downtown is huge. The new stadium, it looks really cool. I know it's going to take a while to build, but the photos do look really cool. And just when that happens, I mean, it's just, you're going to have a tremendous amount of growth. And then Jacksonville is very pro-business. So they're all about bringing big companies in, Fortune 500 countries. This means great jobs, higher than average jobs. And these people will come in, they got to rent somewhere when they're moving in, potentially buy. This is going to increase prices. So that's why I'm just really high on Jacksonville. Yes, the market with the interest rates, there's a win right there. But just Jacksonville as a whole, it's a win. In a decade from now, you won't recognize Jacksonville. And you're going to be wishing 10 years ago that you did invest in Jacksonville.
We've seen it. Go look at Nashville. Go look at Tampa. Go look at Denver. Go look at Austin, right? We're a decade behind them, and the time to invest is before you see it. Because if you go and walk around downtown Jacksonville right now, you're not going to see the $4 billion yet. It's in the process of coming out of the ground. This is the time when you can actually start to build that portfolio and get all of those advantages before the run up.
So speaking about investing back in your community, you guys at JWB, you started the Not Your Average Investor show. Okay. So what kind of inspired you to start this show, and how is this helping investors?
It started off as just a simple idea. What we found is that when we got to hang out with people, whether that is us speaking at events or hosting people in our office or meeting people in the community, when we got to meet people and spend time with people, those folks invested with us and we had better client relationships and everybody won. And so I run the marketing side here at JWB, and I'm like, all right, well, how can I build those types of relationships at scale? And so I said, well, what if we create a platform here where we can interact with new folks that might not be clients, JWB clients, we would love for them to join. And how do we create a community here that is based on learning? It's based on shared experiences, based on having fun. And so that was the real premise of it. It was, hey, listen, if we can create this community, make it a fun environment where everybody's learning, then people will buy more of our stuff. But in reality, people will get so much out of this relationship that over time, it's going to, be a lasting driver of our culture and our relationships with our clients. And that's what we've seen over time. So now we have about 100 folks that show up to our show every single week. It's not a convenient time either. It's on Tuesdays at 12:30 Eastern. And we have folks that come in from all over the country and all over the world. And we talk about topics related to the economy. We talk about topics related to real estate. We talk about perspective that JWB can share on this as well. And we really create a platform for client success. And so it's been a really wonderful thing. And, it's fun. We just celebrated our 400th show just a couple of weeks ago as well, which, I'm not the most, I never thought I would be doing a lot of interviews or be on social media or do all those things or hosting a show. I never thought those things 4 years ago before we decided to go down that path. But now I think about, the most fun parts of my week, and that Tuesday show at 12:30 is right there. That's the most fun part of my week. And it's because of the relationships we get to build.
Yeah, and it's a great educational tool. I very rarely can ever just like watch it on a random Tuesday. So they have podcasts. They put it on the podcast. You can watch it at any time. That's usually when I do. I know they just had their second quarter market update. Great. If you really want to get into a deeper dive into Jacksonville, I would highly recommend that. And I know it's on podcast. I'm assuming it's available on most podcast platforms. Is that correct, Craig?
Yeah, you can find us, just search for Not Your Average Investor Show on any of the podcast platforms that you have. You can go to our YouTube channel again, at Not Your Average Investor Show, on YouTube. And then if you want to join live in the audience, just go to nyais.com for notyouraverageInvestorShow.com. And then you can just register there. We'll send you a free link, and then you can join, be a part of the live audience there.
So before we wrap up, I just want to see if you have any advice, especially for new investors looking to enter the real estate market, and like what are some of the common pitfalls they should avoid?
One of the biggest pitfalls that I see run into over and over and over again is people get it twisted when it comes to how to make the decision to invest in rental properties. Most investors out there focus on the property, and they spend hours and hours and hours and hours spending time on their due diligence on the property. And once they finally go through that process of buying the property, then they say, oh, well, geez, I probably need a team to support that. Well, before I even get to the team, they never pay attention to the market. They'd only focused on the property. They didn't understand the fundamentals of their market. So they go property, never pay attention to the market to see if that's the right market for them. And then they never pay attention to the team until it's too late. They might do a Google search for who's my property manager going to be. And so they go property, maybe market, but probably not, and don't spend much time on the team. And ultimately what they have is worse experience and worse financial outcomes because of the order of operations there. What I would suggest to anybody who's getting started in investing in rental properties, start this way. Focus on the team, because for you to have success in rental properties, it's going to be a long-term buy and hold strategy. And the only way you're going to get to the finish line is by having an incredible team supporting you. So focus on the team, do most of your due diligence on that team. Do you think they're worthy of handling your money for you? And once you figure out that that's the team that's worthy, then do some additional research on the market that they serve. Don't go into a market that they don't serve. The team is that important. When you go and you do your due diligence on the market, that team should be able to help you with that. But you'll get to understand some of the things that we've been talking about here today. We'll get to understand, how does it compare about home prices, or appreciation rates, or population growth, or what's going on downtown. This is information that will support, is this the right market for you? So number one is team, number two is market, and then number three is the property. And if you do this the right way, the team will make both the market and the property decisions fun and enjoyable and easy for you. And you'll wind up with a successful portfolio, not just day one, not just on an Excel spreadsheet, but after a full market cycle, which is really when it starts to change your life and create that better retirement or better financial outcome that you're looking for.
That's great advice. Like, I want everyone to love real estate as much as we do, but I notice a lot of times real estate gets fed to people, they get rich quick schemes, all this other stuff, and then they have the worst experience to their first deal because they just didn't do it right, or however it is, and now it's the worst thing ever. And it's like, oh man, it's like, if you would just have done it right, and you had just a good experience on the first one, then you would have been gung-ho and you'd be starting investing in real estate and you'd be changing your life. It's like people getting into real estate, it's just realize, like, get that first good experience, and then that feeling, just go with it, because if you have a really bad first experience, you're gonna show negativity towards real estate, but it's really not there. You just had one bad experience, okay? Because you just didn't make the right decision, you didn't do the right thing, you weren't working with a team like JWB that can make the process easier for you. So I do second that. Please try to make sure you have a good experience, because we want you to have success, and real estate is definitely one of the avenues that can create success for you and your family.
100%. It's such a shame when somebody works up the courage to invest in real estate and they have a poor experience, or they lose money right off the bat, and then they're out of the game as quickly as they started, right? It's a shame that real estate doesn't have more of a seat in the table for our overall financial portfolios in our country. And so that's why it's so important to work with folks that can set you up for success.
Well, thank you for tuning in today's episode. I hope you found our discussion insightful and valuable. If you enjoyed this episode, please subscribe, as we produce frequent videos related to real estate. I highly recommend reaching out to Gregg and his team at JWB if you're interested in investing in Jacksonville. Gregg, how's a few ways they can contact you?
Yep. You can just go to our website, which is jwbrealestatecapital.com. You can give our office a call, 904-677-6777. You can email us at info@jwbcompanies.com. And again, you can find the show on any of the podcast platforms that you typically find your podcast. Find us on YouTube. Just super excited. Thank you so much, Daniel, for this opportunity to be here with you and with your clients.
Yeah, I really enjoyed it, Gregg. We're going on an hour a year, and it felt like time flew by talking to you. Do know, for everyone listening, JWB's contact information will also be in our information section below. And join us next time for more expert and insight and tax strategies to help you minimize your real estate investments. Until then, stay informed, stay proactive, and happy investing.
Stay tuned for part 2 of Real Estate Investing Insights from JWB's Gregg Cohen. To learn more about James Moore & Company's real estate accounting and business solutions, go to jmco.com. And don't forget to subscribe to our Real Estate Industry Update series to receive updates when new videos are released. If you'd like to be a guest, or if there's a topic you'd like to see covered on a future episode, contact us through our website or email us at info@jmco.com. You can also follow us on social media for more news as the landscape of real estate continues to rapidly evolve.